U.S. consumers' confidence falls in February. Americans' outlook on the economy went into relapse in February. Rising job worries sent a key barometer of confidence to its lowest point in 10 months, raising serious concerns about the U.S. economic recovery. The Conference Board said on Tuesday its Consumer Confidence Index fell almost 11 points to 46 in February, down from a revised 56.5 in January. Analysts were expecting only a slight decrease to 55. It was the lowest level since the index recorded a 40.8 reading in April 2009. And when they stand up, they fall back down again. So, if the consumers don't have confidence in the economic recovery, or if they don't have the money, or if they just plain don't want to spend, then there will be no economic recovery. The increasing pessimism, which erased 3 months of improvement, is a big blow to hopes that consumer spending will power an economic recovery. Economists watch the confidence numbers closely because consumer spending accounts for approximately 70% of U.S. economic activity. The February reading is a long way from what's considered healthy. A reading above 90 means the economy is on solid footing. Above 100 signals strong growth. While economists said that heavy snowstorms in many areas of the country that shut down businesses dampened confidence, many believe that the report confirms that consumers just aren't feeling the economic recovery. More than 6 months after the recovery started, consumer confidence is still close to a record low, said Paul Ashworth, senior U.S. economist at Capital Economics Limited. So, without a sustained acceleration in consumption growth, this recovery will eventually fade. The news sent stocks lower, overshadowing retailers' reports that showed stronger holiday profits. The Dow Jones Industrial Average fell. And again, when they stand up, they just fall back down again. One gauge, measuring consumers' assessment of current conditions, dropped to 19.4 from 25.2, the lowest level since 1983. The other barometer, which measures their outlook over the next 6 months, and had been rising since October 2009, fell to 63.8 from 77.3. The Consumer Confidence Index hit a historic low of 25.3 in February 2009, but then enjoyed a 3-month climb to 54.8 in May, fueled by signs the economy might be stabilizing. But again, this time it's different. There's something much more going on here. Something much bigger. Since then, it has been mired in a narrow range, dropping as low as 47 as rising unemployment took a toll. February's reading is well below the 61.4 figure in September 2008, when the financial crisis intensified with the collapse of Lehman Brothers. The index has had an average reading of 95.6 since the Conference Board started tracking the figures in 1967. The combination of earnings and job anxieties is likely, or very likely, to continue to curb spending, said Len Franco, director of the Conference Board Consumer Research Center. The downbeat report on confidence is very discomforting. Job market critical. But a solid job market is critical to consumers boosting their spending and the overall of health of the economy. The overall economy expanded at an annual rate of 5.7% in the fourth quarter, but only about 1/4 of that growth came from consumers. A lot of it was from the stimulus, but of course, the stimulus will run out. That marked the second quarterly increase in a row after 4 quarters of decreases. Many economists do expect some jobs to be created in coming months. Unemployment fell to 9.7% in January from 10% in December. And employers still shed 20,000 jobs, but they still worry that joblessness will climb back up by next summer as unemployed people who abandon job searches start trying again. The results, based on a sample of 5,000 U.S. households with cutoff date February 17th, showed consumers' assessment of current job opportunities and job prospects over the next 6 months eroded or severely eroded. Those saying that jobs are hard to get rose to 47.7% from 46.5%, while those saying jobs are plentiful decreased to 3.6% from 4.4%. As for the outlook for the job market, the share of consumers expecting fewer jobs increased to 24.6% from 18.9%. Those anticipating more jobs will become available in the months ahead fell. And once again, when they stand up, they fall back down. There's something much more going on here. Something is different, because these are times like's never been seen before and will never be seen again. Everything is connected that's going on in the world. And these are more signs of the end times, transition days. There is a real transition. It is happening day by day in all kinds of ways. And there are many signs.